Hello, welcome. This is Jay from smarthelping.com, and we're going to go over the sports agency financial model. And really, this model is good for a sports agency. It'd be good for an agency that handles professional actors. Basically, anything where you've got professionals that have two income streams, mainly a career income and a endorsement income. So I'll go through each tab, explain how it works, and then you'll understand how to use the financial model here. So first page, global control. This is where you just control some high-level assumptions about the name of the company, the launch year. Changing this will adjust all the drop downs that are available to select throughout the model, as you see here. Um, Exit month, end month, which means whenever you select the end month, the entire forecast will stop on that month, and you could run the forecast for up to 10 years. You can also define if you want an exit value to populate on the end month or not, and this is mainly for proper discounted cash flow analysis. Uh, and the exit value will be based on a trailing 12-month EBITDA multiple. On the home page here, you can also define any debt funding, which will go towards startup costs and burn, initial burn if there is any, and that will be a regular P&I loan. You could zero it out if you're not going to take it, and then any remaining equity required, which will populate here, and that's the minimum to keep the cash above zero. Um, you can define sources by investor or owner, and that will be on the cap table, and that flows here. Now the cap table, you can define, um, I just defaulted it to common shares 100%, and you can just enter any investments from outside investors or inside investors here against this initial minimum equity required. Any leftover that you haven't will just overflow to this row, and you could define the share of profit here for each individual. And then you've also got tax rates here that will go through to the income statement if you want to show taxes. If not, you can zero those out. You've also got a list of sanity checks. These should always be zero no matter what you change the assumptions to. Revenue assumptions, main tab here. So I did up to 3 athlete types, and so the agency can define up to three kind of cohorts. You've got the start month, the starting count of the professionals, and the amount added per month. And these don't have to be whole numbers. For example, here 0.25 essentially means every 4 months you're adding one professional to the agency. And then based on when they joined, their career will start, quote unquote, and you can define what the average annual contract value is of the, in this case, an athlete, and this is the starting base. What's cool about this model is you can also define based, this is the starting amount, you can define how that amount changes as a percentage of the base over 120 months. So 100% would mean they get their base, 110 means it's gone up, 80% would mean it's gone down, and you can do that for the essentially the career of non-endorsement career. So if it was an athlete, this is their playing salaries, player contracts, and if it's endorsements, obviously commercials and revenue of that nature. And these percentages will be different based on data you have, research you can do, and what you expect to be able to do for your professional customers. And endorsements could go longer than the playing career, as you often see with famous athletes and actors. So you can adjust both of these separately, and for each athlete type in this case. So that's the new logic I've never done before that I think is really interesting. You can also define a different starting base for each year if you think your agency is going to change over time to, the average contract value to start goes up over time or what have you, and then your commissions earned overall will be put here, and the commissions are always going to be different for the amount earned on player contracts versus the amount earned on endorsement deals. Usually the endorsement deals are, quite a bit more. It could be double the percentage earned that the agent's gonna get for getting endorsements for the professionals. So these are the revenue streams of the agency. This is going to drive them based on these values multiplied together. And I've got really advanced logic on these three matrix tabs to make all this happen. This is how it's all dynamic, all of this stuff. So that allows you to dynamically enter this over time and see what the actual revenue is for the agency. Now, type 2 and type 3 all work the same way, but you can enter your own figures in for all of these. And if you only have one type, that's fine. You can just zero these out and just use type 1. Expense assumptions, this is where you're going to define the agency's fixed costs and variable costs. For fixed costs, we've got a lot of overheads. You could enter for sales and marketing, the start month of that, and the monthly cost in each year of the line item. You've got G&A items, R&D, and if you don't have R&D, you can always just use these for overflow of G&A or sales and marketing. The logic's the same. We also have a catch-all for a percentage of total revenue that is some cost, and that's just to account for anything else that you couldn't put in elsewhere. Now here's the interesting part: variable cost. You can define for athlete type 1, 2, and 3 a cost per active player contracts per month and a cost per active endorsements. So if a professional has their active playing career is going on, they're also getting endorsements, that would count as two. For example, $500 a month based on all the costs related to ongoing maintenance of the player contract, and then also $500 a month for whatever it takes to keep their endorsements going. So these numbers will be different. It'll be dependent on the strategy, what you're actually willing to spend on the professionals per month, and that will scale with the aggregate amounts. And you can see in the monthly detail here, we'll have counts of type 1, 2, and 3 athletes and how many active player contracts there are for each type and how many active endorsement types there are. And the determining if they're active or not is done in, again, this matrix tab. I think at the bottom I have the activity. Yeah, this logic counts how many active, essentially if how many are not 0% is what it will be counting based on this logic and how many are added over time. Okay, so and that number applies to this dynamically, so that's the one main variable cost. Startup costs, you can define any one-time expenses, anything that's been spent prior to the forecasting period starting, and this will just, you can also put a reserve here if you want a reserve instead of just modeling for bare minimum, $0 cash position. If you put 100,000 here, it means essentially when you see the balance sheet going to zero, it actually means you've got 100,000 still, in theory, because you've got this this reserve amount was counted in the cost required. Debt schedule, here's just the P&I loan. Again, it's just the principal and interest based on the amount entered. Terms here, first month starting, and then on the end month, if the exit is included, this will automatically be repaid on that exit month. If not, it'll just run into perpetuity. The principal and interest will go through the financial statements accordingly. Terminal value, this is just to define on the exit how much of the terminal value is going to go towards fixed assets sales versus extraordinary income, which is just a tax effect. If you don't have many fixed assets, which in this case you might not, like this CapEx is for like depreciable items, computers, you probably won't have a building, you'll probably be renting office space, if anything. But you can define that there, and then on the exit, again, if there's still depreciable life left, then this will show it some profit or loss, and that'll count towards capital gains tax instead of extraordinary income or comprehensive income. So again, this is just a tax thing. You could just put 100% here if you don't need to worry about this, and you could also zero out taxes if you aren't going to, or if you're just showing pre-tax numbers. Cap table we went over. Income statement, here you can see the different revenues from each athlete type, how much they're earning based on the percentages, the variable cost per month, your gross profit, which is just the total revenue less these variable costs, operating expenses, these are all the fixed operational overhead costs to run the agency. And then you've got earnings before interest, tax, depreciation, amortization, which is just EBITDA. This is how much the company's generating in operating profit over time based on all the assumptions. Here's the debt service, interest. The principal will be on the cash flow statement. Depreciation based on any capital assets. And then you've got taxable income, income tax, and net income. Okay, annual income statement, same deal, but just on an annual view. Same numbers, and here's the sanity check to make sure it's the same as the monthly. Balance sheet, we kind of went over this, but here's your cash line, which I'm going to format real quick. This should be formatted like that. Oh, okay, it is. Fixed assets, accumulated depreciation, total assets, liabilities. We've only got that one debt option, and then you've got stock paid, and then retained earnings. And you can see assets equaling liabilities and owner's equity, and that's checked through the whole timeline of the model up until the exit. And again, if the exit is just the end month, but you don't want to include the exit value, that's fine. This logic will all adjust based on hitting yes or no on this selector here. So if I put no here, go back to the balance sheet, you can see now you've just got values through to the end and no debt repayment. So this is just still a liability. And you still got equity here and everything balances out. Balance sheet annual, same deal, but on an annual basis. Your assets, liabilities, equity, retained earnings. Cash flow statement is kind of showing you where all the items are coming that affect cash flow from operations to investing activities, which is just the capex and the sale of the business. In this case, financing activities would be borrowing debt, principal payments, selling stock. And then this flows over to the balance sheet to tell you how much cash you have, and that all balances with all the other items. Cash flow statement annual is a nice view here to show you the detailed list of all the stuff. Now see there's no exit value here. If I were to say yes, then it pops in that now there's exit value. You can see on the balance sheet now we're clearing out assets, and you essentially just have cash and equity and retained earnings. Visualizations, we got just high level items. Here's your revenue by year, EBITDA by year, cash flow by year, total revenue by athlete type by year, stack chart. So this is the total revenue of the top, but you can see what portion is made up by each athlete type revenue stream. Then you've got your counts, so active athlete contracts over time by type, active endorsements going on by type of professional. You've also got, now these percentages are kind of cool, showing you the curve that's put on the validation tab that's showing you the percentage change from base that the athlete's earning over their lifetime or over their career lifetime. And these curves aren't like, this is just what I put, essentially says it starts at a base, goes up, and then goes slowly down over time. Now how that happens will be based on what you input on the validation tab, like I said, in these columns. You've also got total active contracts, so this is total athletes active and then total endorsement deals active over the entire model. Executive summary is just showing you a high-level item of the revenue, expenses, earnings, Other cash flow items, final cash flow. Then you've got internal rate of return here for the project and also for the investor side and owner side if you're doing a joint venture. If you're not doing a joint venture, that's completely fine. You can just zero everything out here on the cap table, zero all the light yellow cells out, and just leave C30. And that will just default to whatever this investment number is, and that'll just flow through the model accordingly. Distributions, here's your discounted cash flow analysis with the net present value of the project as a whole based on the initial investment, cash returned over time, and this discount rate. So you've got net present value, you've got the investors share and the owner's share and their net present values based on a discount rate and their internal rate of returns. Monthly details where you can see what's going on a monthly level. This is probably going to be where you spend most of your time understanding the logic, how things are flowing. Here's all the different logic for how you earn commissions for the endorsements and player contracts and what that is and the accounts. You've also got expenses. Here's your variable cost per athlete per month against the total athlete counts. Operating expenses. Here's all of that, and you can hide and unhide by pushing these two at the top, so you can see, consolidated views of everything instead of the detail. You got down to EBITDA, other cash flow, and cumulative monthly cash flow. And this is how we determine the minimum equity required, which is essentially the minimum monthly cash position. And that's going to be a function of any operating burn plus any startup costs less debt received. Re-expand that out. Annual details, same deal as the monthly. You can view all the line items. We've got some other key metrics here, total active athletes and endorsements over time for the visuals. So that's pretty much it. If you want the template, the link is in the description box below. It'll be at smarthelping.com, other vendor sites as well. Really cool one here. If you're gonna start sports agency, you do need to have a financial plan, and this is a really good planning sheet. And like I said before, this could be for not just a sports agency, just a general talent agency or an agency that represents professional clients that have some two income streams, one from their regular career and then one from endorsements. And this model is a really good planner for that. All right, that's all I got for you. Take it easy, and I'll see you on the next one. Don't forget to like the video and subscribe.